I feel like we're just like in an eye of a storm right now because there has been zero price action whatsoever. I thought we might get some today because the Fed, Jerome Powell was coming out and talking, hey, perhaps it's going to be tomorrow because we have Biden talking tonight. You're watching the Daily Stock Market Brief. My name is Michael Silva. If you're new here, welcome to the channel. I do this show Monday through Friday, 5 days a week. We use technical analysis and intramarket analysis to get a good idea as to where the market might be headed next. And we got a lot of good stuff to talk about today. One of the charts, I don't think anybody's talking about it, but I've been talking about it for now 4 or 5 days, and it has to do with the VIX. So we'll get into that here shortly. Before we hop into the show, I was so hesitant to start a Patreon, and I'm just so thankful to have you all just come and support the channel. 91 active patrons coming in here, and I wanted to let you know I only posted one thing so far because I was going to start May 1st. I was not expecting 91 people to just jump in like that. So thank you so much for supporting my work here, and even the people coming in for the daily trade ideas. After this video, when it goes live, I'm going to be posting 5 chart setups. So just good setups, just trade ideas, and walking you through those for those people that are actively in this group. So once again, I just want to say thank you so much. Let's go ahead and hop into today's show. All right, what's up? Welcome back. Long intro, but we're here now. And we're looking at the VIX on the daily time frame. What have we been talking about on the specific VIX? So we'll get into the market dashboard and all that stuff here soon. Today's video is going to be a little bit more compressed because, well, the market hasn't been moving much, okay? But I added another element down here. This is BB with, it's an indicator. And really what it's doing is just showing us a line of the Bollinger Band that you can currently see on the chart, right? This blue shaded worm-like structure. That's the Bollinger Bands. And when the Bollinger Bands, the upper and the lower, they start to contract, this line goes down lower. Okay, and we've been talking about this Bollinger Band getting tightly contracted. Now, this works really well on stocks too. It's called a Bollinger Band squeeze. It's actually a trading strategy. I forget who developed it. I remember mentioning it on Twitter a while ago, and even showing the book that teaches the Bollinger Band squeeze. You can probably just Google it, but it is a trading strategy, and it's a pretty good one in my personal opinion. Now, what is the Bollinger Band squeeze? Well, it's showing us that the Bollinger Bands are getting very tightly contracted. So instead of me walking you through what it is, I can show you what happens here on the VIX when the Bollinger Bands get very tightly contracted. So we're going to look at Bollinger Band width here, and notice here it's coming down to 17.73. Now that's a low reading. It hasn't been there all year. All right, so it has not seen this low of a reading for the entire year. Okay, last time was in October. It was actually slightly below it, and then also September. Now, do you remember what happened in September? Well, not only did the VIX spike here and over here, but those were during times where we saw some pretty gnarly corrections in the S&P 500. But remember, but what I want to call out here is it could stay contracted for quite some time, and you can see that visually here. All right, they're getting contracted, and it stays contracted for a while, and then pow, right to the upside. Contracted for quite some time right here in this little pocket, and pow, right to the upside. All right, you can even see it actually right over here. It didn't reach that low of a reading. It did over here, but I didn't bring enough on the chart. But you can see right there, pow, to the upside. So we're getting into that territory where this is a very, very tightly contraction, which means to me that it's compressing, it's coiling up for a move. Is that going to be to the downside, or is it going to be to the upside? I don't have that answer, but I can tell you just from a technical perspective, right? We have this little cupping pattern taking place in the RSI, which took place there in October and September too. We broke out of this falling wedge, and now we're in this very tight pennant or another falling wedge type pattern. So to me, it does seem like there's a possibility to squeeze higher, but it hasn't happened yet. But I want you to all be aware that that is a strong possibility, because if you're in individual stocks and you're trading, and this thing pops out of nowhere, that could bring on some gnarly moves to the downside for specific stocks, right? The VIX is like a fear index. It tracks volatility. It's a volatility index. Now, I want to bring it into the 15-minute time frame. And when I say like calm before the storm, I'm not necessarily, implying that there is going to be some crazy storm and things are going to fall apart, because the overall context, which you'll see in the daily time frames, it's very bullish, okay? But it is weird seeing this price action just absolutely going nowhere. Even today, during the Fed speech here, you can just see a quick little spike and then drop right back down. So this area of resistance was broken, and then it came back right within this channel pattern. It hasn't moved anywhere since the 26th, or since the 20th, even before that, right? So around the 25th, it hasn't really gone anywhere. So support is still at around 417, and resistance, technically it's now more of a range of 418.50 to 419. All right, now we have the VIX below us. We still have a gap above us and a gap below us. So the immediate risk to quote unquote the downside here would be a gap fill right at around 19, and then we also have resistance right around 20 from a daily perspective as well, and also this little 15-minute perspective. So that is the risk to the longs. Now from a daily perspective, a couple things I want to call out, right? Still a negative divergence. We hit an all-time high today. We tagged an all-time high. We didn't close at an all-time high. No, we did not. Okay. And then the price percent oscillator still crossed over, which is bearish. We're at the top range of this, a megaphone pattern, broadening wedge pattern. And then the daily price action, the candle is a little bit of a reversal candle, but it's really it's not like a dramatic one by any means, but it is a little inverted hammer candle, which implies that if we start, get follow through, it could head a little bit lower. All right. Now from a 30-minute perspective, negative divergence. It broke out of this pattern, and it's been kind of, it came back to backtest it, got rejected. Back tested it, and then it's just been going sideways. Still overall in bullish context, even on the 30-minute time frame. If we do start cracking below, you can see more gaps below us. So the main area of support that we might hit if we have that VIX spike would be right around to 398 to 400, this kind of zone in here, which could present a good bounce opportunity. So we got to be mindful of that. Now, if you didn't watch yesterday's video, I do go into a little bit more detail of how this pattern on the daily time frame looks very similar to 2010. So it's worth a watch if you haven't watched it yet. From a breadth perspective, we're looking at an indicator here, still a negative divergence building as we're cracking out all-time highs. That happened here before the big sell-off. Now, keep in mind, that was due to a pandemic. I understand that, but just pay attention to how breadth was dying off. There was no pandemic here, but things kept on grinding higher and higher and higher, and then something hit out of nowhere. And, we're grinding higher and higher, and I should move this red box actually out further now, pink box out further. Grinding higher and higher and higher right here. Nothing's wrong yet, but we don't know what could be a catalyst for a potential sell-off. So you gotta just be mindful of that. Market dashboard, down, Dow Jones, down 164 points here. What's up on the day? We had the NYSE that's up, and the S&P 600, the small caps. Now, let's look over at the sectors, the 11 sectors that make up the S&P 500. Now, first off, we talked about small caps being a potential performer because of why? Because of financials. The yields didn't do much today, which we'll pull up that chart. So that could be why, small caps are doing decent, really relatively flat. But energy, come on now. We've been talking about energy, trying to get that moving. We saw strength today. Finally, just a huge move compared to the rest of the market, up 3.45%, just destroying the other sectors. So congratulations if you've been in that XLE trade. My butt exited the trade, and I went into something else, but I'm doing just fine. I didn't catch a 3.45% move today. I would have loved to, but unfortunately, I shook myself out of that position to take on another position. No. Now, I want to look at the daily chart. This looks to me like a solid breakout right here. So we, resistance, the trend line was broken. We got back above the 20-day moving average on good volume. We're back above the 5. We're back above the 10 EMA right there. So this could be the start of another leg higher here. So get excited for energy stocks. Actually, some of the stocks that I'll be going over in my Patreon will be some energy setup. So be on the lookout for those if you're supporting my channel through Patreon. Here's oil. Oil still, this is where it could get a little tricky, right? Oil was up on the day, but we didn't break through that resistance. We didn't get a confirmation break above that resistance. And if this is a fake out, just a move here and then starts heading lower, that could put pressure back on energy stocks where we might see this head lower or potentially consolidate a little bit longer, or back test and then potentially head higher if we start breaking out. So keep an eye out there on WTIC. Let's look at the Dow Jones really quick. Not much going on here. We're right at the 20-day moving average. Price action slightly down on the day. Down, like I already said, 164 points. Let's continue to monitor this, right? There's still support here overall in very bullish context. So there's honestly, to me, there's nothing to freak out about. I'm very curious to know how the market's going to respond tomorrow after the Biden speech. I thought that we might see some sort of catalyst of something today because of the Powell speech, but nothing. So we'll continue to monitor that. Now, transports. It's part of Dow theory, right? We have the industrials and we have the transports. They work hand in hand. The transports, which we discussed on the weekly recap of last week's episode, which, by the way, if you don't know what that is, on Fridays I do the weekly recap where I go a little bit more into detail. We have a shooting star candle here, but on that weekly time frame is very, very, very overbought. And we have a little shooting star candle here. So let's see perhaps if we get some sort of evening star pattern, which is a 3-bar candlestick pattern, right? We have a big green day moving up. Then we have a shooting star type candle. And then we have a big red candle to follow, which could be somewhat of a topping pattern. You know, don't hold too much weight until it gets confirmation, but we'll continue to monitor and see how that develops. Here's IWM. This was slightly up on the day. Small caps. We've been saying small caps look actually like it's been in a consolidation period. The original thing we said, it looked like it was a topping pattern, and it definitely did, and it still can be at this specific point. If we get above 230, though, that's looking like we're going to be taking out the all-time high and heading higher, especially if we start to see financials continue to perform, and especially if we see yields start to go up again. That could, because yields came down a little bit, but overall, the banking sector, the financial sector, has really just been consolidating and hasn't really been hurt. So if yields continue to ramp up, that's good for the banks. Why is that good for the banks? Why is that good for financials? Well, they borrow short-term, i.e. deposits, right? And then they lend out long-term. Let's look at the Qs. Qs just in a lot of chop back and forth. Be careful here. Overall, still bullish context. Just know that this could be a period of distribution. People might say it's a cup and handle, and they might be completely accurate to say so. Price percent oscillator did cross over to bearish, so we're going to continue to monitor that. The immediate support is right around 334. And the 20-day moving average, which is at 335. So a little bit of a zone there. Could be potentially, not really flagging, but kind of flagging, consolidating right here. So we'll continue to just see what takes place. I'm going to bring in the semiconductors because the semiconductors make up a big portion of the NASDAQ. And we broke out, right? So April, we had that breakout. Everything screamed up higher in April. Now we're in this period of consolidation. We marked out this pink box as a potential back test opportunity. I don't know if it's going to reach it. It might reach it. The Bollinger Band continues to move up a little bit higher and higher, the lower range, and that can act as an area of support too. Like, for example, when it came down through here, it reached a little bit lower, but then we shot up. So if it does reach a little bit lower and come down to this range around 3,000 for the semiconductors, hey, get ready because you might be able to play some really good trades on some individual semiconductor stocks. So that's kind of where my eye is going to still be at for the semis. Let's take a look at the dollar. Dollar plunked today down 0.30. So pretty dramatic red candle to the downside. And this has just been this is a rock to the downside. Like, talk about a fake out breakout right there, and then it just continued fall down. And now I was thinking over here around 61.8 retracement level, this is a good bouncing opportunity, but we haven't seen it. Now what I'm very curious to see what happens is, first off, I don't know if this is a fake out candle or not. This is a wide range candle right here, but typically when you see this move to the downside, you could see gold perform, you could see silver perform, you could see Bitcoin perform, you can see equities perform. For example, right, we tapped out here and we started heading lower. That was the same time that this broke out and started heading up higher. But this big red day, we didn't really see the S&P 500 go up at all. So, it reached out to an all-time high, so I guess we got to give credit where credit's due. But this, to me, looks like it's trying to head to the yearly open. And last time we were there was right over here in late February, and we bounced from that area. So, hey, we'll see how that develops. I didn't even think about this until now, but perhaps if I draw a trend line from right here, this point to right here, that'd draw out to a line of support right to where we are, this area of confluence. I don't know if you'd hold too much weight on that or not, but we'll continue to watch this. Let's look at yields really quick. Nothing going on really with yields, relatively flat. We'll continue to just monitor this one as well. We're just at this standstill, unfortunately. So I'm just going to keep continuing to say we're going to continue to monitor this as well, because that's all we can really do right now. Now, if, like I said, yields go up, it's going to be good for the banks. You know what that's bad for? It's typically bad for gold, which we've seen. Now, I went into more detail on a previous video about the 10-year yield and also real rates and how gold tracks real rates. And I'm not going to get into detail right now, but it's okay to see yields go up. It doesn't necessarily mean gold will go down if the 10-year goes up. But what we need to pay attention to is the real rate, which factors in inflation, right? Am I getting that correct? Yeah. This is the nominal. The 10-year right here is the blue. That's the 30-year up above us. And then the real rate tracks is incorporating inflation into the equation. Here is gold. All right, now on Sunday, I got a sponsored video coming out on Sunday, another gold mining company, so I'm excited to do that. But I'm going to go into more detail specifically about gold and a study that Tom McClellan did around this 26-day turning point, which we're just, I'll give you a sneak peek. We are actually there right now. Now, I don't know if that's a turning point to the upside or the downside. I believe that he believes that it's to the upside given the basing pattern right here, but I'm going to get into more detail of that on Sunday's video. However, I want to call out here, we did break out. We are back testing. I like the price action here. Right, little hammer candle right here to 1760 with previous support, previous resistance. Once it's broken, it then can become support. Hey, to me, it could also be potentially flagging right here. Boom, to the upside. We're still above the 20-day moving average. Let's recapture the 5. Let's recapture the 20. This could be good. This could be a good sign for gold. So we'll continue to just watch here and see if the 1760 level holds. Let's look at silver. Silver not looking as good, but it doesn't look like it broke anything horribly yet, right? We have a low here, a higher low, and a higher low. We're above the 20-day moving average. Price percent oscillator looks like it's getting a little weak here. We got to take out this 27 just above it, right? So, or just below 27. I'm just going to call it 27. Resistance. It's getting hung up a little bit. Hey, perhaps we get that squeeze above it, and then that's when we start to see these metals really shine. But as it stands right now, we gotta wait for confirmation because it's just not out of the woods yet. And now, finally, I want to just talk about Bitcoin. Bitcoin, we have been seeing this gnarly fall to the downside, right, to 47.5, but then just a monster recovery. We mentioned on a previous video, we got to get back above that 50-day moving average. It clearly acted as some sort of resistance on today's trading day. The 50-day moving average is at 56,983, inverted type hammer candle. That can change very quickly here. Price percent oscillator looks like it wants to start crossing back up, but we are below zero. So we want to have that cross, be a bullish crossover and get back above zero to give us a little bit more confidence that momentum is shifting into the bulls direction. Now, from just a overall context standpoint, bulls are still very much in control. We have the 200-day sloping nicely up. Price is clearly above the 200-day moving average. 50 period is sloping up to slightly getting flat here, which means the trend could be slowing down. But we got to see here if it recovers and takes this out, because if we start breaking above that, the next target is the all-time high, which was right around 65,000, that kind of range right there. So, all right, everybody, that's all I have for you on today's episode. Like I said, if you are a Patreon, I am going to be posting those 5 charts as soon as this video goes live, shortly thereafter. Once again, I kind of want to really recap. Be very careful out there. We have Biden coming out tomorrow. We saw what happened when he mentioned when the administration mentioned the possibility of the taxing of capital gains. So, perhaps whatever goes on tonight, when it should be live right around the time that I post this, it could have some impact on the market. So watch the futures market, see how that plays out. Remember these key levels that we talked about in the S&P 500, the Dow, both from a 30-minute perspective, and then also, once again, just be mindful of this contraction right here on the VIX, because when the VIX pops, it can pop very quickly. And if something is a for sure move to the upside, I mean, we can go tap 35, and then we got to be prepared for looking for individual stocks if we do reach up into those levels, because despite popular belief, if we get up to these levels, that's typically where, from these points right here that we've seen previously, it's typically an area where you want to actually go long, and it just makes sense from a risk versus reward standpoint on a lot of cases. So be careful out there, and I will see you tomorrow.